Thank you all for joining us at this last session for our what has been a wonderful four-part series, just relooking at the business of pharmacy, the practice of pharmacy from the angle of a business. Yeah, and it's been an exciting journey. Thank you for each of you making time. It's been every week just engaging with you and learning and just appreciating that there is more to pharmacy than just practice. There's also the art of the business. There's the pharmacy the pharmacist as a professional has two faces, as a business person and as a as a caregiver. Yeah. So today we have the final session, which is financial management, the essentials of financial management for running pharmacies. It's going to be practical. We look at some numbers and we'll take through some questions. So far, we've gone through a journey that has, we've looked about the why of you as an entrepreneur, the why of you as the owner of a business. Why did you start your business? And when the days become hard, what will make you go on? Yeah, so that's really what we did with that session. Number two, we also looked at the how does this then make money and lose money? What are the different assumptions we have to make as we start this? Either it's a startup or we have reached a point where there's growth and now the growth has slowed and it's even going down. How then do you keep growing it? So what are the parameters? We looked at that. We also looked at process, performance, and performance management. This was basically looking at tools and systems and structures that help you, whether you're a one-person practice or a 20, 30-person practice, what are you guys meeting and discussing as you journey together? What are the different parameters everyone is handling? Everyone has a pulse on something, it's one body, it has different parts. So how do you then measure all of those? Yeah, we talked about leading indicators and lagging indicators. Lagging indicators are the indicators such as number of clients seen or sales made this year. Yeah, you'll only know those when you reach the end. But so that doesn't become a surprise, whether good or bad one, what are these leading indicators that you should be following? We did some marketing to X number of clients. We followed up debt collectors. We looked at our margins and saw how best to get better margins, because you don't want to reach the end and realize, wow, we sold 1 million, but our expenses are 2 million. So, well, what have you been doing? So those are now the things now, getting into the running of the business. The other part of running the business is the financials and cash flow management. So as I've shared, that's the recap. Really it had two dimensions. The first dimension was the strategic part in designing and planning for growth. I know that many of you who have been approached by many people who tell you, so nipatie license, nasikia pharmacy iko na pesa, yeah? But then you ask yourself, really, are you going to get into an alliance just for the money? It has to be more to it, yeah? There are people to be helped. There's a profession to be advanced, yeah? There are innovations to be made. There are new ways of thinking. There's employment to be availed to people. There's growth of leaders, So then it needs to be more. I find it, I'm increasingly becoming intolerant to conversations of just starting a business so that we can just make money. I know that because today is my birthday. I turned 42. I've been in this sector for the last, since 2001, and learning it and understanding it has given me an element of kuna a lot of patapotea, but also there's a lot of meaningful and grateful work. Yeah. And one of the patapoteas is when you actually lease out your license and you're selling your birthright. Then you wonder, oh, why is the profession this bad? Yeah. So those are really it's a spectrum. Yeah. Yeah, so we looked at that, the strategic dimensions. Why are you starting a business? Then there's execution and operations. So last week we looked at the process and the KPIs as we've shared. Yeah, so today we look at financials, and I'll share with you. Um, I'll help create an overview of what to look at in some three key financial matrices. So that's cash flow, profit and loss, and balance sheet. Yeah. I have something to say about this because when I used to run Haltons, I had a board chair. My board chair was an amazing man. He had been the immediate MD at that time for Clicks Pharmacy. Those of you who know Clicks Pharmacy, it's the largest chain of pharmacies in Africa. It has almost 2,000 pharmacies, if I'm not wrong by now, but then it was like 700, yeah, so between Discam and Clicks, they have 2,000. So I remember one of the feedback he gave me in one of the coaching sessions was, Louis, you're very good in, the why of the business and all those things. But, if you don't handle your finances, and finances not even just, if you can't read a cash flow statement, if you can't, or even craft one, if you can't look at a profit and loss, if you can't look at a balance sheet and try to see what is the picture it's telling you, then you will be letting down your employees. Your employees are there thinking you're the CEO, you know what you're doing, but you have no clue. You wake up one day and realize, oh, there's no money here. Either we've been stolen from by someone, or I've been directing this ship somewhere, but then so then people's lives get at jeopardy. So this is one of the areas I think for us as professionals we really need to look at. It may mean today I may not take you deep, but I just whet your appetite, yeah, and you see that actually there's a lot I could do, or even I want to demystify this thing for you so that you do not have to say yo ni maneno ya accountant. I want you to say, oh, this is how we will be able to introduce new services. Oh, that new service, what has it, impact? How has it impacted someone? Things like that. Yeah. Maybe by show of hands, or even just on the chat, how many of you don't like, how many of you don't like finances of the business? Side of it, of the practice rather, or even just not even like, but you look at these documents and they just don't make sense. You look at the money, you think it's your money, then all of a sudden the accountant is telling you it's not your money. You wonder who's it's the bank's money, is the KRA's money, is the everyone is getting paid except you. Yeah. The employees are getting paid, everyone is being paid, everyone except you. Yeah. I'm sure tuko wengi hapo. So understanding cash flow management, one of the things that we'll look at the three: cash flow, profit and loss, cash balance statement, but also we look at cash flow management a bit more and just do what are some of the things you can use to do forecasting of it. Yeah. Yeah. So going to see if we're all together up to there. What's financial management? Yeah. It's a cycle that involves planning, looking at so either you're a startup, yeah. How will you plan if you're a startup? You might go and meet someone, ask some questions. Some of you just enter and say, I have 500,000, and you start say everything has to fit in that 500,000. Yeah. So out of that, you allocate resource, start operating, get some feedback, and evaluate and report, and the cycle keeps continuing. Yeah. So in financial, in pharmacy operations, the importance of the financial management is it helps you with forecasting cash flow. So you should be able to say, um, uh, we can run with this investment we've gotten for the next 9 months, and by 9 months we should have broken even. So that is something you've projected. Yeah. It helps you with financial controls. You'll be able to say, wow, we are spending so much here on staff tea, or because each tea is given with a croissant, so we say, okay, kila mtu ajibebe a cook croissant nyumbani, we'll only provide tea, things like that. Yeah. Scenario planning. Okay. What we want to introduce a new product. Yeah. So what does that mean? Does it need more staff? Where's the money to pay the staff? How do we pilot? Yeah. How do we pilot this service? Oh, maybe we need to call in an MTM pharmacist to come and give them space here. They try out first, if it works. Because we think if we have been seeing a lot of clients who need MTM services. So let's, instead of hiring an MTM pharmacist, let's just create space because we're only paying for rent. Whether it's there or not, we'll still pay. Then, we review what that does. Then after that, you start getting into an agreement, that sort of makes it even more, that helps you commit more resources to that, yeah. Raising funds and choice of funds. Many of you, when I'd like to hear from you, by the way, when you're raising funds, where did you raise your startup? If you have a pharmacy, the first cash you raised, where did you raise it from? Your family, friends, bank, investors, maybe put it on the chat. Because there's a lot that goes into the choice of those funds. Sometimes what I've come to learn, just because the money is available doesn't mean you should take it. I remember getting into a partnership where you just took the money, but then you came in and realized, wow, these people deal with other things. For example, this is a true story. They were dealing with betting and some triple X rated kind of things in the overseas market. So you do not want to be associated with those. So you have to quickly get yourself out of those things. Yeah. But you took the money just because it's available. You can find yourself in deep. And that's why it's important to remember why, circle loan, yeah. Why you got into this, yeah. Savings, family, friends, yes. Circle. I can see a lot of savings, yeah. I like to talk about savings. Savings is very important because sometimes we belittle the places where we've worked. Oh, this boss is like this, like that. There are two things you get from where your current employment, where you are, if you don't have a pharmacy, yeah. You get first a salary that you can live on some income and save other. And if you're married, you should target to live on one person's income, the rest you save for your joint goals that you come together. And some of you are running pharmacies together with your spouses. How do you come together? And so you can actually find that you may not need to go to the bank, by just doing that, because you can actually save a lot. Imagine if your spouse is earning 100,000, 50,000, after end of a year, that's 600,000, or 1.2 or even 5 million for some of you, and things like that. But some of you, when you get an increment in salary, you quickly increase lifestyle. Lazima gari ipate subwoofer, lazima gari ipate what do you call those things that emit exhaust? Yeah, those things. Yeah, nice wheels and things like that. But again, you're eating your tomorrow today. So that when you do your cash flow projections, you're in your financials, you're able to see then why do I need to save? Because this dream of starting a pharmacy requires money. It's not just that 500,000. It's money for marketing, as you'll see later. Yeah, I'll show you in some of these financials. You also need to determine the capital structure. Some banks might not be able to lend you money if you don't have a limited liability company. Yeah. Who is on your board? Who is, what's the structure of your company? Yeah. And as you're structuring that, is it coming as debt? Is it coming as equity? All those things. Yeah. And all that comes down to these financial books that I'll be sharing with you today. You also need to you'll do analysis. You use financials to determine, sio kukaa tu kwa meeting and you've discussed stories. Financials help you discuss numbers, put numbers behind the stories, so that then now you can say, okay, that thing you said, how will it improve? How will it move us from what we are doing now in margins to this? Yeah. Oh, this is what we need to do. Yeah. So that's why you have financials. And of course, profit allocation. You either reinvest in the business, start a new branch, hire more staff, add new services, or divest. You might decide to, let me buy a plot next door so that this area is growing. I might be able to take a circle loan, start a building, and at the ground floor, I'll put a pharmacy, a supermarket, whatever it is. Then up, I'll put houses. My staff will live in those houses, whatever it is that you want to do, divesting or dividends. So you might have shareholders, your spouse, your friends, your whoever gave you money, you need to give out dividends. Those of you who are in business, I'd like to ask you, any of you who has ever given themselves dividend check at the end of the year? Or when was the last time you gave yourself a dividend check? Yeah, you've been running a pharmacy. One of the things we forget to do is always pay ourselves. Yeah, so we're always paying everyone except ourselves, and that's what financial management is about: being able to ensure that you pay yourself, pay everyone else. Yeah, and then because then you keep getting motivated. If I remember on our first session when I asked why are we yeah, thanks. Before COVID hit, yeah, why are we starting this thing? It's about finances as well, yeah, because it's an avenue. It's not just a profession, but also it provides income, yeah. And our business is actually very hard in the sense that in one pharmacy you have like you could be having like 1,000, even 4,000 different items, and if someone just takes a pack of 1,000 medicine worth 1,000, yeah, that means you have to, because your net profit are around, if you're retail, maybe 10%, you'll have to sell 10,000 to return that. So if someone steals 10,000, you sell 100,000. If someone steals 100,000, you have to sell 1,000,000 to return. So you're selling a million, you're thinking you're in money, but you have to pay for what has been stolen. So how do you know what has been stolen or not if you don't have financials? And that's really why we are addressing this today. So there are three financial matrices that you need to be looking at. I know you're familiar with these. You have the profit and loss, which just gives you the historical performance. This is has been our income, money that came in. This is the expenses we paid out, and this is the profit. Inside there, you can add taxes, you can add other things, but it just shows you historical. But also, you can project it. You can actually project it. But once you project it, it becomes something else. There's something else called a balance sheet. So balance sheet, you have what do you own on one side. Then you have liabilities, what you owe others. Then you have your equity stake. Yeah, in that. This gives you the present value of this thing. How much is this thing worth? Usually it's done after a period, at the beginning of a period, at a year, at the beginning of a year, at the end of a year, in the beginning of the month, end of the month, and so on and so forth, because it's a living document. Yeah. And cash flow statement. Yeah. Cash flow statement just shows you the health of the business. Yeah. As I'll show you later, cash is the oxygen of a business. I know we think much of the customer, but also cash is, yeah. Because without cash, then you are not able to, keep the lights on and the thing. So it shows you at the beginning of the month, what came in. It can even be a beginning of a day, what came in, what left, what has remained, yeah. So that whatever is remaining is used to pay tomorrow's bills, yeah, and so on. It goes on like that, yeah. All right, so from here on, I'll switch between this and an Excel sheet just to show you something. So you have the profit and loss, which is said in the summary of the pharmacy's revenues, expenses, net profit. Remember, we talked about gross profit. You have sold 1,000,000. You've paid Nila or whichever supplier is supplying you 700,000. Yeah. And you've remained with a gross profit of 300,000. That 300,000, what do you do with it? Yeah. So we are here. So you sold. Let me move my screen here. So you sold in February 300,000. Yeah. You paid suppliers 250,000. You remain with 130,000. That is called gross profit. Now, from that gross profit, you have to pay people. You pay everyone. Then you remain with something. You remain with a negative 243. Yeah. Where does that money come from? So that's just a picture of that, that month. Yeah. So it tells you the profitability of that. Over here, you have your break even, sort of target. You have it there, and like that. Yeah. So it helps you assess your profitability and performance. So out of that, you can be able to say, let's look at revenue. Is it growing month on month? Are we growing? Yeah. Remember the curve. It grows, then starts going down because you're sleeping on the job. Then you reactivate, like that. Yeah. You need to look at your gross margin. Are you under, pricing? Or are you overpricing? Because you change the margin a bit, you get more sales. Or you might change the margins, then you still remain with the same sales, but then your profit reduces. Yeah. That's where gross margin comes in. And operational expenses. Yeah. So remember those cost of goods, it's an expense, cost of sales, but then you have operational expense. These are the things you must do to be able to move. Yeah. At this point, let me project an Excel sheet. Um, this is a profit and loss example. It depends on what you're in a mall. Maybe you I don't know if I can increase this, but if those of you can increase from your screens, let me just do like that. So you are in a shopping mall, maybe your margins are 35%. Yeah. See what happens to the numbers when I change. Maybe you are in a very, you know, main street and you are very competitive. So maybe your margins are 20%. Yeah. So what was, if you're meant to sell, if you're to sell, let me put these numbers, maybe like an easier number, 1 million. Is that 1 million? Yeah. Yeah. So if you that's 1 million, your turnover, cost of goods is 100,000 because you remember your margin was 20. But if you just change and go to the mall and sell 1 million, your negative, yeah, sort of reduces, yeah. Because the total expenses, but again, these expenses are very high, so you have to come in and change the salaries and things like that, yeah. So that's what that looks like, yeah. It even gives you the average sales, things like that, yeah. So that's what a profit and loss looks like, and you can project it, outwards. But the important thing about a profit and loss is you should be able to capture everything, and that's why it's important to capture your expenses. Don't just take a receipt. You don't remember. It's not just for filing taxes, but also important for you and in running, and because this is what you'll use to project next year. Yeah. Next year, you'll say, maybe let's reduce some expenses here, or let's tweak some things here, add some services, then your income increases. And if you add services, maybe some services don't have cost of goods, things like that. Yeah. So that's what a profit and loss looks like. Yeah. Your balance sheet. Yeah. So you remember your balance sheet, what did this say it's about? It's about providing your net worth. What is this business worth? Ukitaka kuuza hii biashara, what does it look like? So this looks like your assets, yeah, your liabilities, and your equity. If your liabilities are more, because this one, assets, should be equal to liabilities plus owner's equity. When this is high, sorry, when this is high, this usually is low, yeah, and vice versa. So liabilities include, taxes, loans you've taken, payables. Payables are things that maybe you've taken on credit, things like that. Then you have your cash, your assets. Some of you have bought securities with your money, things like that. Yeah. So it provides a snapshot of a pharmacy's financial position at any given time. Yeah. So it could be at the end of the month, at the beginning of a year, at the beginning of a month. It has those three components. And if you remember your business education, current liabilities, non-current liabilities, current assets, non-current assets. Cash is current, non-current is like maybe stocks. Yeah? What to look out for is what's your composition of your assets. Yeah. What are you holding as cash? Yeah. So and that's what sometimes you find that some businesses are healthy enough that they've actually invested some of their money. The stock that they have, they paid for it. Things like that. Yeah. It also shows you your debt levels. That versus equity, because I told you if your debt is high, your equity will be hit. And when you're trying to sell, someone will say, why am I taking this thing? It has so much negative. But then someone is buying it because they see the upside. So they can then look at that and discount, or give you a value and say, okay, I'll take over your liabilities and give you something on top, something like that. Yeah. Let me zoom in a bit. So what does the cash flow statement tell you? The amount of money that came in, it came in as what you sold, or sorry, opening balance from the previous month or the previous year, or the previous day. You have your clients you sold to, payments you received, loans. Sometimes you have to take a loan or other people's cash. I got this money from my wife. You have to return it. Yeah. Cash going out, the people you paid, and the difference. What remained? It's either surplus or negative or positive, yeah? Surplus or deficit. So you can see it's deficit. You have to carry it over to the next month, yeah? So it goes on like that. So you can do this as projection. Then put the actual, then determine the variance. You understand? When you determine the variance, you're able to see how healthy this thing is. So, and how much money do we need to inject? So you say in the month of March, let's inject 1.5. Because we've injected 1.5, you can see it has gone it has gone to positive. It's buying you time while you increase your sales. Yeah. So sometimes I see we have a struggle because we just assume 500,000 is enough. But you have to do some modeling and be able to project. So, and that's what a cash flow statement comes in to do for you. Yeah. Who is king, customer or cash flow? I would like to propose that cash flow is king, because the cash flow is how you pay your taxes. Thanks, Rose. It's how you pay your debts. Yeah. It's how you grow. Yeah. It's how you put in measures to serve more customers. It's how you pay your dividends. It's how you reinvest, things like that. So my question to you, as you, I know people like saying, oh, times are hard. The government is doing what, things like that. Even chiefs have come. They don't take our money. They're documenting us so that KRA can come for us. Yes, that's okay. But do you know the health of your business in these 4 areas? Yeah. And are you using, if I asked you, what does your profit and loss look like? What does your cash flow statement looks like? Yeah. Thank you everyone who's saying cash flow. So how does that look like? What does that look like? Yeah. Yes, I'll be able to share with you guys on yeah. So as we ponder on that, I have a discussion question here for you. Yeah. What are the various aspects of your business that you think you would focus on to release cash into your business? So we've determined cash flow is king. Yeah. Because you need cash to do all these things. And we are saying the economy is bad, there's no cash. What are the areas do you think we can focus on in your pharmacy to make it, start having oxygen coming in, oxygen coming into it? Give me like areas in the business where you need to focus on to pump in more air. What are these areas? Reduce sales, so I need to increase sales. Yes. Sales is one. Yes, actually sell is one of them. Inventory, so that when the customer comes, they can find. So you make some changes here on inventory, you start seeing more customers, because customers are coming and don't have to wait, and they start saying, oh, I like that place, because when you go, you find inventory. Competitive prices, marketing, true. You need to bring down expenses, inventory management versus procurement, and liquidation of the inventory. Yeah, it's not just enough to have the inventory. You should be able to liquidate it. A cash flow statement, it's important to look at what a cash flow statement is. So we've looked at that Excel sheet. It provides you an insight into your cash flow, inflows and outflows, yeah, over a period of time. It highlights the sources and uses for your cash. We get cash, we pay our salaries, we pay our marketing, things like that. So some of you have said marketing is one of the areas we need to focus on. So you might realize you are underspending on marketing. If you look at your competitors, the ones who are doing well are spending a certain amount. So where do you get this money to do that? And that's when now you go to a bank or wherever you are looking to invest, there's a big question they always ask you, what is the money for? A cash flow statement will help you determine that. Because when you put in this, you can see a change in the sales, yeah, from your experience, yeah. What to look out for is positive operational cash flows. So you want to be able to have a positive cash flow at the end. And even if it's negative, you need to understand why and what are the things that need to be done. Yeah. Because if you're negative over a period of time, utaanza kusumbuana na landlords, suppliers, staff, all those things. Yeah. It also helps you see some trends. Because some of you will say, oh, this month inakwanga very bad in pharmacies. Oh, why is that? Oh, you need to ask like that. Oh, children are going back to school. Okay, so maybe we need to market, targeting children who are going back to school, to do, free deworming or whatever it is, yeah? And, then they'll start having you top of mind, yeah? And things like that. That's why I was asking who is king. So these are some of the areas that you need to work on. Inventory management, you're right. You need to analyze your data and see what are your patterns. Why do I need to stock this? Should I keep just in time? You need to look at your accounts receivables. So maybe you are running a pharmacy in a hospital, or you're running a pharmacy that has insurance or NHIF and things like that. And you guys know how bad it is right now. Guys are taking your money. You're serving your clients with suppliers' money, and what do you call them? The client the insurance company on behalf of client is not paying. Yeah. So you need to be able to kill those bad debts. What incentives can you give for these guys to pay early? Sometimes, if your margin is 30%, you might say, I'm giving you guys a 5% discount. Yeah. It's better than staying with this money out there because you're paying for it in terms of the loan or whatever it is that you have to take. Operational efficiency, how are you utilizing your staff? There's nothing as bad as having a place of work that staff are so idle, or staff don't know what to do. There's no vibrancy, and that usually happens because also there are no numbers to help them see, give them feedback, or even help them see, oh, where do they need to focus on? It's this time of the hour. There's no business. Okay, what can we be doing? So we need to be planning orders and things like that. Yeah, how are you optimizing your staff? Yeah. Revenue optimization. Are you pricing right? Some of you might be underselling yourself, underpricing yourself, just because you believe the myth, e-market ni mbaya. Or some of you might be not buying innovator molecules because you think brands, because you think, oh, this market is for generics, but the customer even thinks, I don't go there because they don't stock innovator, and vice versa. Yeah. You can also look at new revenue streams, marketing. You can look at expense reduction, what you guys are saying, cash flow forecasting, and management. So when you sit with your team, you should be having these 3 books. Yeah, maybe you're sitting at the end of the month. The best one is cash flow. You can do it every week. Where are we? You can take your month cash flow, divide it over 4, and say we should be doing this much sales this week. Our expenses should be here. Why are they high? Why are they low? Things like that. Oh, why haven't we spent on marketing? Things like that. Yeah. Because if you don't spend on marketing, then there will not be a result at the end of marketing resources are almost like a leading indicator. If you do not market, you will not get the lagging indicator at the other end. Yeah. So I wanted to introduce you to something that empowers you. Yeah. So even this one is an Excel sheet. It's called the power of one. Just write it down, Google it, learn more about it. Yeah. The power of one is I will do 1% change in my pricing. Yeah. I'll do 1% change in my volume. Yeah. Either the volume I stock, or if I project that I'll sell this much of volume. Yeah? My cost of goods sold. Yeah. My operational expenses. Yeah. I'll cut them down by this percent. How does that impact my expenses? Yeah. And how does it impact my net profit? Yeah. Cost of goods will affect your gross profit. The price will affect your top line turnover. How much you turn over every month. Yeah. And as well as volume. Yeah. Account receivables, that will affect your cash flow projections, because if hii pesa ilikuwa inafaa kukuja after 2 months, saizi tuko month ya 5 na hakuna new money that has come in, tunalipa aje watu na pesa ya nani? Kuna mtu anachezwa hapo. Yeah. Inventory or works in progress. So what are these things that you're holding? Yeah. So also you don't want to overstock. So if we say, let's reduce our stock by holding stock every month to this month, but let's increase the number of times we turn over stock. So I bought stocks worth 500,000. I've turned it over 4 times. Yeah, 500, like that. Huh? Accounts payable. Am I paying my suppliers on time? What happens if I give my supplier a check on when it's due, tarehe moja, nimpatie, sinafaa kumlipa 1 million, nimpatie 800,000 at the beginning of the month. Yeah. And on 15th, nimpatie 200,000. So that's how you make decisions now. Yeah. Again, and these are things that you talk with your suppliers, so that, because all suppliers want is predictability. Yeah. Once you start playing games like that, I'll pay you next week, 2 weeks. Okay. After that, you start asking for 2 months. Then you're not paying, you're not honoring. Then it affects them, and even the employees and things like that. It also affects the cost of healthcare. Generally. Yeah. In conclusion, yeah, we've looked at 4 things: cash flow, profit and loss, balance sheet. we've also looked at the power of one, this tool, yeah, for the power of one. Again, to be shared with you. Just use these tools to put in your numbers and be able to see how to, forecast. How are you tracking progress? Remember, there was a projected and actual in your cash flow. Are you putting the actuals, and are you even looking at them? Your accountant is doing them, but you never seem to use them to make your decisions. Yeah. And out of those 7 levers, which ones do you want to focus on as you go back to your pharmacy tomorrow? Yeah. Which one do you want to focus on? Is it price? Is it volume? Is it cost of goods sold? Is it operation? Where will you have an extra 10K, 40K, 50K, 100K at the end of the week, at the end of the month, at the end of the year? Yeah. Where will you have an extra 1 million because you made some changes here? Yeah. So as I conclude this, I like to say that as pharmacists, we need to look at ourselves beyond just the practice. Yes, we're in love with the patient. We are the first point of call over 70% of the time. But if we are unable to handle the why of our business, yeah, the strategy part of it, and the operation, yeah, the processes, the performance indicators, the leading and lagging indicators, the cash flow, the profit and loss, the balance sheet. If you're not able to wrap your head around this, yeah, you will be stuck in the water. You will just be there complaining and saying it's the government. But if you look inside keenly, yes, the government is doing that, but even you, are you doing what is in your control? What can you do? And what we've been going through in the last 4 sessions are actually things that are in your control. So my objective was to help empower you with tools and even a mindset that some of you might actually be able to realize that you're actually good with numbers. You're actually good with operations. Yeah, you've been selling yourself short because you didn't have the tools. Now you have tools that you can even go to Google, research some more, YouTube. Nowadays learning is online. Get a group of you. Remember Nyumba Kumi? You are next door 10 pharmacies. Usione haya, nunuliao chai, croissant, mkae mahali, and discuss these things, yeah? Because then that's how you are able to sharpen yourself and even eradicate quacks. Because one thing I can tell you about quacks, they are probably business people who know these things, yeah? Maybe not the way we know them, we presented them now, but intuitively they know, yeah? And you who's a professional, you struggle because you're so in love with the profession, which is true. But like I said, without the oxygen that is the cash flow for your business, you will struggle. You and your patient will actually, and your employees will actually struggle, and you'll close your place and you leave the quacks to the patient. So that's all I had for this session. And I'm available for questions and answers. Another thing I'll say is leverage tools. Some of you are asking about Pharmaco. Just go to their website, book an appointment. I've asked some of them to come at the conference and just come and speak there. Look at the technology. What tools. YouTube, like I said, you can learn from there. And you can even rewatch this this 4 series and just get the snippets to go learn some more. Yeah. And even some of you might decide to go do an MBA. Now that you thought MBA might not be something good for you because you didn't understand why, you can actually go and do an MBA and even and even take a focus on finance. Yeah. So Amos, I'll take questions.
Thank you. Thank you very much, Doc. Yeah, I think you've introduced to us an MBA class, Doc. I think this has been a super amazing, series that you've really dwelt on, Doc, for the last 4 weeks. It has been very, very informative, Doc. Great lessons, great lessons. So, as we wait for some quizzes, Doc, maybe I could respond to one of the participants who is asking about the tokens. Yes, please ensure you subscribe for the events. Nowadays, things have changed. In the PPP portal, you notice that if you don't subscribe for the events on time, once the presentation has taken place. Tomorrow you are not going to see for those events in the portal. So please ensure you subscribe such that you are able to claim the token. Because if you don't subscribe and we share the token, there is no way you are going to claim. So ensure you subscribe. So Doc, yes, I think you can there is an attendee doc asking that if you can kindly suggest an effective tool for tracking profits in retail pharmacy.
Yeah. Thank you for that question. I actually wanted to use one of the tools that there's Pharmaco. You can actually have there's I don't know if you can see my screen, but go to Pharmaco online. I don't know where it's one. I needed to touch it this way. You can go to Pharmaco and here. So you just go to Cobase and talk with them. There's also QuickBook. Here. And let me go to the plans. Huh? If you go to QuickBooks, even for $1 for a month, I think they have an offer right now, yeah? For $1 per month, that's almost like 150 bucks. But here's the real plan here. They're around 17 pounds, 25 pounds, 35 pounds per month. That's almost like 5,000 per month, yeah? And you will actually need the simple one or the essential. And it integrates your profit and loss. So how you receive your inventory, it tracks your expenses. And if you add the your expenses in there, non-inventory expenses like electricity, marketing, all those things, you'll have your profit and loss. And out of that, it can even make for you a cash flow projection. So I would recommend these two, very good tools. Just go to cobase.co.ke, also go to QuickBooks and just search those. And even ask your friends, the 10 pharmacies around you, which other tools would they use? Yeah. How do you ensure no disparity between physical stocks and what reflects in the system? That's a good question. You have to actually have regular stock takes. You have to have how the inventory comes in. So, garbage in, garbage out. So how does it come into the system? How does it leave? Are all credit notes entered? Is it everyone who issues credit notes once they have sold? All those things, putting controls. And then someone needs to be responsible for the stock. Yeah. And those are some of the areas in which you can actually, not just everyone goes and touches the stock. So you can actually separate. But if it's only a group of one person, you are the one who was responsible for everything. Yeah. Sometimes when you get overwhelmed, you start dispensing and you did not even batch in the system. Yeah. Then you get stuck with bad data. Yeah. And you won't even be able to track your income because there's income that's not entering the system. Yeah. So that to answer that question, you have to go to the operations, the processes. Who's handling this procurement, entering the system, selling, picking from the shelves. You have to categorize your shelves. Actually, both these they have a function where in the system you can actually categorize a shelf in the system. So you can even do a stock take in a shelf, because some of you feel overwhelmed to do stock take over 5,000 items. Yeah. So just go and do a stock take on 20 items, 30 items on one shelf, and another week you can do another one, then make some changes as they are live. Remember that how are you efficiently using your stuff? So when you have these tools and the data, you're able to say, why are guys idle? They should be looking at the shelves and doing stock check, things like that. Yeah. All right. Thank you.